Sunday, April 19th, 2026, 15th ETF, 15th day. Like and subscribe. The $1 Investor, NUKZ Full Breakdown. Today I want to talk about NUKZ, the Range Nuclear Renaissance Index ETF. This is ETF number 15 for me, the last one on this list, and I just started buying it yesterday. The fund launched in January of 2024, tracks the VettaFi Nuclear Renaissance Index, holds about 53 companies, and charges an expense ratio of 0.85%. The fund is built to invest in companies tied to the nuclear value chain, including fuel, utilities, advanced reactors, and the construction and services side of the industry. What that means in plain English is simple. This is not just an energy ETF. This is a direct shot at the nuclear supply chain during a period when electricity demand is rising again and the market is starting to treat nuclear as a practical answer to that problem. Range's own materials say the nuclear sector is being driven by policy tailwinds, electricity demand, global plans to expand nuclear, and the appeal of advanced reactors for AI data centers. That is why this ETF caught my attention. I do not look at nuclear as some old story from the past. I look at it like a comeback story that is getting pulled forward by reality. Reuters reported this month that big tech is putting real financial support behind next-generation nuclear power because AI data centers are power-hungry and nuclear developers need customers willing to help absorb project risk. Reuters also reported that U.S. electricity demand hit a record in 2025 and is projected to rise again in 2026 and 2027. That is the environment NUKZ is sitting in. Now let me talk honestly about the last 5 years. The ETF itself does not have 5 full years of operating history because it launched in January of 2024. So when I talk about the last 5 years, I have to separate two things. First, what the fund has done since launch. Second, what the nuclear theme has done over a longer period. Since launch, NUKZ has been one of the stronger thematic products in the market. Range's site showed an annualized return since inception of about 75.7% as of October 1st, 2025. An ETF database recently showed assets around $869 million with a 52-week range from about $32.70 to $75.03. My screenshot showing the fund around $72.52 fits with that strong run. On the theme side, the market has gone from treating nuclear as an afterthought to treating it as part of the AI power conversation. Reuters reported in January that growing nuclear generation, reactor construction, and AI-driven data center demand were tightening the uranium market, with U.S. uranium spot prices ending 2025 around $82 per pound, up roughly 12% from the end of 2024. Reuters also reported in February that uranium suppliers were already talking with data center operators about financing new mines to support future nuclear fuel demand. Now let's talk about what is actually inside the fund, because that tells me what kind of bet I am really making. Based on my screenshots, the top holdings include Cameco, GE Vernova, Endesa, Rolls-Royce Holdings, Fordham, Talon Energy, CEZ, Vistra, Dominion Energy, and Duke Energy. The top 10 holdings made up about 36.46% of total assets as of April 14, 2026. Sector-wise, your screenshot showed roughly 46.13% industrials, 35.95% utilities, 12.46% energy, 3.94% basic materials, and 1.52% technology. Morningstar's portfolio page also reflects that mix, including names like CEZ, Vistra, and Dominion among the larger positions. That mix matters. This is not a pure uranium ETF. It is not just a utility fund either. It is a broader nuclear ecosystem fund. That is part of what makes it interesting. Cameco gives exposure to uranium fuel. Utilities like Duke, Dominion, Endesa, Fordham, and CEZ give exposure to operators and regulated power. GE Vernova and Rolls-Royce bring in the equipment and reactor angle. Talon and Vistra tie into the rising power demand side of the story. In other words, NUKZ is trying to own the whole chain, not just one piece of it. What does Wall Street think? Right now, Wall Street seems to be warming up to the nuclear trade because it solves a real problem: firm power. Range's own materials point to energy security, clean energy policy, and advanced reactor development as tailwinds. Barron's recently highlighted a list of stocks for a nuclear renaissance, and Reuters has tied the recent strength in uranium and nuclear-related names to AI data center power needs and long-term agreements from big technology customers. In other words, Wall Street does not see this as a fringe environmental theme anymore. It is increasingly seeing it as an energy infrastructure theme with an AI kicker on top. As for what analysts are saying, there is not the same style of direct analyst chatter around the ETF itself that I would see with a single stock. What I do see is analyst and media support for several of the names under the hood and for the broader trade. Barron's has highlighted GE Vernova, Vistra, Talon, and other nuclear-exposed names as beneficiaries of the nuclear power revival. Reuters reported that Vistra is one of the prime beneficiaries of surging AI-driven power demand and has already tied nuclear generation to an Amazon Web Services agreement. The overall tone is not nuclear maybe. The tone is nuclear is back in the conversation. Now the question is who executes best. Now let me bring it back to my own position, because that is what I do on this channel. According to my screenshot, I started this position yesterday. The fund price was about $72.52. I began with a recurring investment plan, and I plan on building it the same way I build everything else, $1 at a time, on purpose, with discipline. I am not trying to catch the perfect entry. I am trying to build exposure to what I believe will matter over the next 20 years. Now let's talk about the next 5 years, because that is the real reason I bought this thing. I see 3 roads. The first road is the bullish road. In that world, electricity demand keeps climbing because of AI, data centers, electrification, and industrial growth. Utilities and hyperscalers keep looking for reliable low-carbon baseload power. Uranium markets stay tight. Advanced reactor and nuclear service names keep gaining capital and contracts. If that happens, NUKZ is sitting right in the middle of a very powerful trend. Range's own site says more than 30 countries plan to triple nuclear energy by 2050. And Reuters has reported that tech companies are already helping finance the next generation of nuclear projects. The second road is the middle road. In that world, the nuclear story stays alive, but it moves slower than the market hopes. Projects get delayed, regulation slows things down, uranium pricing stays volatile, utilities keep moving forward but not in a straight line. In that kind of market, NUKZ can still work, but the ride looks more like a staircase than a rocket ship. The opportunity remains, but investors have to live through delays, politics, financing issues, and the normal headaches that come with capital-heavy infrastructure. The third road is the bearish road. In that world, nuclear enthusiasm outruns actual execution. New builds take too long, costs overrun, uranium prices become unstable. Power buyers lean harder on gas, renewables, or other alternatives in the short run. If that happens, this ETF can absolutely get hit because Range itself warns that nuclear companies face substantial government regulation, contract risk, customer concentration, energy market volatility, and the possibility of significant losses. So my bottom line is simple. NUKZ is a bet on the nuclear comeback becoming real enough to matter financially. Not a science experiment, not a headline, not a fantasy, a real industrial, utility, fuel, and power trade tied to a world that needs more electricity than it used to. That is why I like it. I come from the kind of life where I respect the thing that quietly keeps everything alive. Same way a city runs because power, roots, and systems are in place, this next digital world is going to run because somebody is generating all that electricity. Software gets attention, power gets paid, and nuclear is back in the ring. Like and subscribe, The $1 Investor. Today I want to talk about NUKZ, the Range Nuclear Renaissance Index ETF. This is ETF number 15 for me. This is the last ETF on my list, and I just started buying it yesterday. This one matters to me because I believe the future is going to need more power. Not slogans, not wishful thinking, real power. And when I look out at where the world is heading, especially with artificial intelligence, data centers, electrification, and rising energy demand, I believe nuclear is going to matter a lot more than most people still realize. That is what NUKZ is built around. This fund launched in January of 2024. It holds about 53 companies, and it is designed to track businesses tied to the nuclear renaissance. That means uranium, utilities, reactor technology, construction, services, the whole chain. This is not just a uranium fund, and it is not just a utility fund. It is a broader shot at the nuclear ecosystem. When I looked at the top holdings, I saw names like Cameco, GE Vernova, Rolls-Royce Holdings, Vistra, Talon Energy, Duke Energy, and Dominion Energy. That told me right away what kind of fund this is. This is not some narrow little side bet. This is a bet on a full system. Now let me explain why I think this matters. Artificial intelligence is going to need a ridiculous amount of electricity. Data centers are not powered by hype. They are powered by real generation. and the market is finally waking up to that. Reuters reported this month that big tech is stepping in to help fund next-generation nuclear projects because AI data centers need more electricity. Reuters also reported that U.S. power demand is projected to rise again in 2026 and 2027 after already hitting record levels. That is not small stuff. That is the kind of pressure that can force the market to rethink where reliable power comes from. Now let's talk performance. This ETF does not have 5 full years of life yet, but it has already built a strong record since launch. Range showed annualized returns since inception, around 75.7% as of October of 2025, and the fund has moved from the low $30 area to the low $70 area over its life. That tells me the market has already started rewarding this theme. Now let's talk about the structure. The top 10 holdings make up around 36% of the fund, so this is not overly concentrated in just 1 or 2 names. At the same time, the sectors tell the real story. A big chunk is in industrials, another big chunk is in utilities, then energy. That mix tells me this ETF is trying to own nuclear from multiple angles: fuel, generation, equipment, infrastructure, and that is exactly what I want. Now let me bring it back to my own position. According to my screenshot, the fund price was around $72.52 when I started, and I am building this the same way I build everything else, $1 at a time, every single day. No excuses, no drama, no trying to look smart, just consistency. Now let's talk about the next 5 years. I see 3 roads. Road number 1 is the bullish road. AI keeps expanding. Data centers keep demanding more power. Uranium markets stay tight. Utilities and reactor names keep gaining support. And NUKZ becomes one of those funds that looks obvious in hindsight. Road number 2 is the middle road. The story stays alive, but the path is messy. Projects get delayed, politics gets involved, regulation slows things down, the market gets impatient, but nuclear keeps moving forward anyway. Road number 3 is the bearish road. The excitement runs ahead of reality. Construction delays pile up, financing gets harder, power buyers hesitate, and the market cools off on the whole trade. That can happen too. That is why I stay disciplined. So my conclusion is simple. NUKZ is one of the cleaner ways I have found to invest in the power side of the future. Not the app, not the glamour, not the headlines, the energy. And if the next 20 years really are going to be more electric, more digital, and more AI-driven, then owning part of the nuclear comeback $1 at a time makes a lot of sense to me. Like and subscribe. The $1 Investor.